Well, the Chinese premier is now heading to Germany for more trade talks. China is still Germany's top trading partner globally, so does it stand to gain even more from Beijing's trade war with Washington? It's going to be my first question for John Tamny. He's a political economy editor at Forbes magazine and an editor at RealClearPolitics.com. John, might Berlin and indeed Brussels be the winner of all of this?
Anyone's a winner. Any country's a winner when you open yourself up to foreign production. Let's remember, an economy is just a collection of individuals, and so when you're open up to the world, your individuals get a raise every single day. The losers in this will always and everywhere be the U.S. and China. What a needless thing instigated by the U.S. Our economy is booming today precisely because China is such a big market for U.S. production. Why would we want to shut that off? It doesn't help China or the United States.
John, there's been little reaction, talk reaction at least. We've seen some action, but official reaction to the U.S. tariffs that went into effect on Friday. Has there already been an impact economically, politically, perhaps both?
It's hard to say that there's an impact yet, but there's going to be. I think what's forgotten is Peter Navarro with the Trump administration says China has lots to lose. He gets that backwards. There are double the number of Starbucks in Shanghai than there are in New York City. GM sold more cars in China in the first quarter than it did in all of North America. Apple's the most valuable U.S. corporation in the world. It sells 20% of the iPhones that it sells in China. If the U.S. continues in this direction, the value of its corporations, the ability of its corporations to sell around the world would be greatly curtailed. What a needless move by the Trump administration.
So that's been the possible effect there on China and the U.S., but what effect might this tit for tat between the world's two biggest economies have on the global economic recovery in the rest of the world and on some of the countries, of course, that are now benefiting from that?
By definition, it's going to be negative. Why is trade so good? It just allows people around the world to specialize. And so when you limit the ability of individuals, because that's all an economy is, to exchange with one another, you reduce the path towards specialization that lifts everyone up around the world. And when you consider everything that's produced in the world today as the result of global cooperation, attempts to limit what's happening, what is very good, by definition, are going to have a negative impact globally.
Alan Greenspan, the former chairman of the U.S. Federal Reserve, he was in Qingdao this weekend, and he said the U.S. should stop the tariffs. Now, of course, he's in his 90s. He's seen a lot. He's a Republican. He served under Reagan, under Clinton, during both Bush administrations. Is anyone in Washington going to listen to Greenspan?
He doesn't have quite the reputation or the influence that he once had, but let's be clear, it's well understood that the U.S. must stop these tariffs. If you limit the ability of the Chinese businesses to sell in the United States, by definition, you limit the ability of U.S. corporations to sell in China. And so in stopping the tariffs, essentially what we're doing is we're enhancing the ability of U.S. companies to sell in what will be the largest market in the world going forward. So Greenspan's right. I think his influence is understood, at least in back channels. And thankfully, even inside the Trump administration, there are people who want to reverse what is going to be so damaging for the U.S. economy.
John Tamny from Forbes magazine and RealClearMarkets.com. Story we'll keep watching with you in the coming days and weeks. Thanks for joining us.